Hello everyone, today is November 20th and I'm Annie. I have two pieces of news to share with you. Since the meeting of the leaders of China and the US last week, the market sentiment has gradually warmed up. Vincent's previous predictions for everyone can be reviewed in the link in the upper right corner. Simultaneously, three major indicators, the copper-gold ratio, the yield spread between Chinese and US 10-year bonds, and the exchange rate have shown positive signals and deserve close attention. Recently, the copper-gold ratio, an indicator of macroeconomic cycle, has started to rise. The increase in copper prices and the decline in gold prices correspond to the rise in industrial demand, improving economic expectations, and an easing of risk aversion. Historically, the trend of copper-gold ratio has a strong positive correlation with A shares. Also, as U.S. economic data weakens, oil prices continues to fall, and the midterm U.S. bond yields peak and fall, the spread between Chinese and U.S. interest rates begins to narrow. The narrowing of Chinese-U.S. interest rate spread affects global capital's willingness to allocate to renminbi assets and relative strength of the Chinese and U.S. economics. Historically, after the narrowing of Chinese-U.S. 10-year bond yield spread, A shares tend to show significant strength. Besides, the renminbi exchange rate representing domestic economic expectations gradually tops out and falls. After reaching a high point of 7.36 in early September, the offshore renminbi exchange rate has maintained high volatility and appreciated to 7.22 since November. From the correlation between the renminbi exchange rate and the A shares, when the renminbi enters an appreciation cycle, the performance of the entire A share market tends to be better. In other news, there's information regarding China and Saudi Arabia. As one of the most important countries in the Belt and Road Initiative, the People's Bank of China and the Saudi Arabian Monetary Authority recently signed a bilateral currency swap agreement. The swap size is 50 billion yen, swap 26 billion Saudi riyals, with an agreement term of 3 years, extendable by mutual consent. The establishment of a bilateral currency swap arrangement between China and Saudi Arabia will help strengthen financial cooperation, expand the use of the two countries' currencies, and facilitate trade and investment between them. Following the rapid development of Chinese companies establishing express delivery networks in Saudi Arabia and the increasingly close business exchanges between China and Saudi Arabia, it is believed that more Chinese companies will continue to explore and develop the Saudi market. That concludes today's news, and we will continue tomorrow with more updates. Bye!